Okay, Daily Trader TV, it's episode 9, it's 26th of the 1st, it's 20 to 2, it's Friday. Don't forget the disclaimer, don't be buying and selling anything you see me buy, be careful of leverage, and don't ask me about individual stocks, because I'm not licensed or qualified to tell you. Pretty busy, hectic day for me today, so it's going to be a quick one. The question that's been asked today is about spreads. We talked yesterday about what a spread is. We're going to talk today about how they widen. So we can see the spreads here. Boom's got a very big spread. It's basically a penny stock. Then you've got things like filter, which are micro caps. Then obviously as you go down, you get to the bigger, more liquid stocks. You've got things like EQN, the spread's very, very small. So just a reminder, the spread is the difference between the buy and sell prices. So we also call these bid and offer, so because it's effectively an auction. So how can these get wider? So let's go into something that's a little less hectic. This one's better. So let me explain what you're looking at. This is called a TER, and I'll just go through each part of it. So what it's saying is there's 4 people who will sell you their stocks for 231.5. This is the number of stocks they've got in total. So there's 4 people selling a total of 6,660 shares at 231.5. And same on the other side. So if you want to get out, if you want to sell your share, the buyers on the other side are willing to pay 229.5. There's 3 currently, and in total there's 3,625 shares. Now these are non-market makers. The market makers have the names. So Wins, it's Winterfloods. You've got Peel, JP Morgan. So you can see these named accounts. These are market makers. The role of the market maker is to make a market. So the market maker has an obligation to always make sure that there's a market. So let's say, worst case scenario, Donald Trump launches a ICBM right now, it's at North Korea, and hits the newswire. These bids and offers are going to disappear. Right? The next thing that's going to happen is the market makers, who are obligated to remain in the market, buying and selling, are going to bring these prices right back. Certainly Winterfloods and Peel are going to come right back into this crowd here. So let's say these two brought their price, all these disappear, and Winterfloods brings the price back to 220. So at the TER, the price is 220. All these are going to go. So all the people that want to buy and sell, you're going to find that more than likely you're going to drag more people into the market that are going to want to sell. So you may find that the market makers move up so that initially, while all this is going on, you've got a spread of 231.5 to 220. So I'm hoping that's explained to you how the spread widens. Basically, the spread contracts and widens dependent on the availability of buyers and sellers. There's always a difference. That's how a market's made. There has to be a difference between the bid and the offer. So hopefully that answers the question. Let's just have a look at what's going on. So EQM, which was a swing trade, it's moving out quite nicely. Photo me, yeah, it's fine. It's having a bit of a pop. Cake, still trying to get above the highs. RFX, okay. Bowl, okay. TPU, okay. Camel, okay. I want it to trade back above this high. Boom, okay. FLTA, okay. On the beach, yeah, it's trying to get above all-time highs. AMAT, bit of a down day yesterday, still fine. Gym, fine. Big down day for it, but if we zoom in, these sticks here are volume sticks. So we can see on this day that there was 5.8 million shares transacted. Now, this is a big down day, but can you see that there's not a lot of volume? 62,000 shares transacted versus an average of 280. So what it's telling me is that there's been a bit of a air pocket in price, but it's not like there's an avalanche of people selling. So it's pretty much all normal price action. You know, I'm expecting price to come back into this area anyway before hopefully it moves out. So if we have a look at the account, yeah, still near highs. Still nothing much to see. I'll just keep reinforcing to you that this is what trading's like. It's not all whiz bangs and fireworks. It's pretty tedious, pretty boring. These numbers move around. You know, one day you're up 10,000, the next day you're down 3,000. You just get used to it. It's water off a duck's back eventually. Over time, if you've got positive expectancy like we talked about, you'll make money. But it's going to take time, discipline and routine. And I think we'll leave it there for today.